Now, heading into this highly anticipated Saturday meeting between Scott Bessent and Chinese trade officials, Wall Street is kind of mixed, with some areas doing better than others. Donald Trump today suggests that an 80% tariff on China could be appropriate, but it's ultimately up to Scott Bessent. China says that there should be a withdrawing of the tariffs on the U.S.'s part, and Swedish officials actually say that there could be a pause on China tariffs against the U.S. and U.S. tariffs against China. I have all of your breaking news that you need to know in this video. Now let's get into all of your broader market breaking news today. Now there's a couple big headlines today. Trump said on Truth Social that an 80% tariff on China seems right, but it's up to Scott Bessent. So saying if Bessent wants to do something, he's kind of has the reins to do so. And I think Bessent probably wants a pause on tariffs, at least for negotiations, because of the severe issues that are being caused right now. And the headline that hit the terminals was Trump, 80% tariff on China seems right, which is still way higher than what is sustainable. But the latest headline that came out from the Swiss economy minister, he says it is possible that the US and China agree to a mutual suspension of customs duties for the duration of the talks. So that would be like suspending tariffs, like pausing tariffs, okay? It's coming. Let's just be honest. It is coming. If it is not, markets are going to fall. Like, I think that is the expectation. And I think that's partially why some stocks are outperforming so much today. People are kind of front running that a little bit. And I think, let's be honest, like the S&P has recovered a lot from the lows. I think this has kind of all been a front run to the pause on China tariffs. And I do think when you get that news over this weekend, you're probably going to extend higher even then. Because again, recession odds are going to plummet. Wall Street is going to need to get allocated to markets again. Hedge funds and institutions have been, sitting on the sidelines of this market, essentially. They cannot afford to do that if the trade deal with China passes or if there is a pause. They have to essentially, get allocated to markets again. Like they would not have a choice in the matter. India offers to slash the tariff gap with the US to under 4% from nearly 13% under potential trade pact. India is offering zero duties on 60% tariff lines to US compared with 3% tariff lines now under a potential pact. And India asks the US for exemption from all current and future tariffs amid trade talks. So essentially, India wants a pause on tariffs as well. Also being reported today that Germany's foreign minister will speak with Rubio. FedBar says tariffs could create persistent upward inflation or upward pressure on inflation. And he says that he expects tariffs to lead to higher inflation and lower growth. Fedbarkin says, given economic strength, monetary policy is in a good position. And Fedbarkin says, I'm concerned that tariffs will lead to higher unemployment. So it does seem like, at least from Fed officials today, they're a little bit more concerned about the unemployment, the labor market component. And Fedbarkin says Trump's tariffs are without modern precedents. So we really just haven't seen this before. FedBar says the Fed may be in a difficult position if both inflation and unemployment rise. So really just reiterating a lot of what Powell said yesterday. FedBar says AI may require policymakers to reassess the natural rate of unemployment. That's something we have not heard ever before from the Fed. Chinese Premier Li Qiang says we are to step up building of a free trade zone. So this actually sounds very positive. Let me tell you why. It's simple. What did the UK do to get a trade deal? They opened up a $5 billion market to the US for beef, agriculture, ethanol, a couple other products. China, if they want to build a free trade zone and open up the country to more areas for the US to enter, that is very persuasive to get a deal with China. I mean, like, come on now. China could offer something really good and make it seem like a big win for the US. and make a big win for themselves. But I do think while those talks are ongoing, starting on Saturday, starting tomorrow, you will get a pause on China tariffs. Probably tonight, if I were to imagine. Fed Kugler says Q1 GDP showed the real side of the economy is resilient. Trump says China should open up its market to the USA. Again, if that's all China has to do to get a trade deal, I'm pretty confident these talks this weekend are going to be fruitful. Trump says that closed markets don't work anymore. Trump says the GOP should not increase taxes on the rich, but it's okay if they do. Fed Kugler says economic health gives the Fed time to make progress on inflation, but he says it's unclear how tariff policy will shake out. Navarro on China trade talks says, quote, "It will be an interesting weekend for the markets." Navarro says Japan is most clever at protecting its own markets. And he says that countries are lining up to talk trade with the US. Navarro says the US will sell more beef, poultry, and dairy to the UK. And Navarro says the EU is very high on the priority list in trade talks. The Canadian unemployment rate came in at 6.9%. The forecast was 6.8%. So more weakening in Canada. Why I point that out is because the US and Canadian economies tend to go hand in hand. When employment rises in one, it tends to rise in the other. If things are good in one, it tends to be good in the other. White House senior advisor Hassett says the UK trade deal is a framework for future deals. And White House senior advisor Hassett says 24 other trade deals are closed to being resolved, or close to being resolved. And he says everything going on with the Swiss meeting with the Chinese is positive. Trump said on Truth Social, many trade deals in the hopper, all good, great ones. And Hassett says we will see a lot more deals like the UK deal in the coming weeks. And Hassett says we will know more on China tariffs after talks in Geneva. Fed Williams says, I expect growth to slow considerably and inflation and unemployment to be higher. And he says the next few quarters will help illustrate or illuminate the economy's state of affairs. The World Trade Organization spokesperson on U.S.-China trade talks in Geneva this weekend says the Director General welcomes talks as a positive and construction step towards de-escalation. China's Commerce Minister Wang says decision on U.S. trade talks is based on a full assessment. China's Commerce Ministry in their statement says Russia and China had in-depth exchange on bilateral cooperation in responding to U.S. tariffs. The Swiss president says the pause on tariffs is not to be lifted during negotiations. And then again, just almost right after, you had the finance minister that says it's possible that we could agree to a mutual suspension of custom duties for the duration of the talks. Like, there's a lot of uncertainty today. That's what I can tell you for sure. And again, nobody really knows what is going to happen, but I think the logical step would be a bilateral pause. China pauses their tariffs, we pause our tariffs, and, actually let for negotiations. Fed Bostic says the 2025 economy is to be less resilient than earlier expected. The United States and the Europeans are working to put together a proposal for a 30-day Ukraine-Russia ceasefire. And Iran reports the next round of talks with the U.S. is to take place on Sunday in Oman. The percent of stocks trading above their 50-day moving average today coming in at 57.1%. Moving up a little bit, 1.3% of stocks today are breaking above their 50-day moving average. So you're back to pretty much a normal level for where stocks, typically are. You're not super bullish, you're not bearish, just kind of normal. So I think there's room in either direction to get stronger or to, get worse and fade. And it really just, again, depends what happens with the talks in Switzerland over this weekend. Specifically, do we get good news? Like, we need good news. If we don't get good news by Monday, or really Sunday, but first day of trading for the new week, markets are going to fall on Monday, okay? Just keep that in mind. Now, on Thursday, yesterday, you did see the AI Investor Sentiment Survey sharply recover from the prior week. Bullish investors going from 20.9% to 29.4%. So big move there. Neutral investors fell from 19.8% to 19.0%. And bearish investors fell from 59.3% to 51.5%. So looks like people are getting a little bit more bullish, but still like almost double the amount of bears versus bulls. Again, hedge funds and institutions, they're not super bullish on this market. They can't be super bullish on this market because of the heightened recession risk. Okay. It's almost impossible to be super bullish on this market unless you just have a view that Trump's not going to push us over the edge. But if he did, you would lose your clients a lot of money, probably lose your jobs, right? So that's why there's this under positioning from Wall Street right now. CNN's Fear and Greed Index coming in at 62, which is almost midpoint of greed. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, fear. Market volatility is neutral. Safe haven demand and extreme greed. Junk bond demand, also in extreme greed. Now, the Swiss economy minister says trade talks with the Chinese addressed in bilateral. The objective is to advance quickly. So, some people even speculate there could be a trade deal announced, or the framework of a trade deal announced this weekend. So again, I think we just have to wait and see at this point. That's going to be the big catalyst that drives markets next week. How do these talks go over this weekend? If they go well, if we either have a framework for a deal or a pause on China tariffs, those are like the two things that I see at this point that would cause further upside in markets. That's great. We get upside, the bulls win. If we don't hear much, or it doesn't sound good, or there's arguments and a lack of progress, then markets are going to sell off. The fact of the matter is, we will start to see the real consequences of, pausing trade with China over the coming weeks. And that's going to hit inflation. That's going to start to hit jobs. That's where the recession or depression risks start to really rise. So we're not quite there yet. There's still time to avert disaster or crisis, but we're approaching that faster than most would like. Let me know what you guys think about this down below in the comment section. Have a great rest of your day, and I will see you in the next one.